In this video, I want to talk about my $50,000 lazy portfolio and exactly why I think everyone needs one of these. So I know a few weeks ago, I made a video talking about the benefits of a lazy portfolio. And for those who don't know what a lazy portfolio is, it's basically a portfolio consisting of just 3 index funds or 3 ETFs that track the domestic economy, the international economy, and also bonds, but I substituted that for another fund in my portfolio. So if you haven't checked that video out, I do a better breakdown on what exactly the lazy portfolio it is. But in this video, I want to do an update on how exactly I built my lazy portfolio so that I can dollar cost average into the market no matter how high or how low that it may be, and always know that my money will always be working for me no matter what. So before I actually get into the portfolio, let's do a little bit of housekeeping and say for the new people here, my name is Anthony McLemore. I like to make videos about how to make money online, investing, and other things here and there. I really want to start uploading videos more, just making money online and different things like that. But I have had a little bit of analysis paralysis in these past few weeks where I will record a video, delete it, record it, delete it, and honestly end up not posting anything. But I do plan to start posting a little bit more free-flowing content about whatever I'm investing in or trying to make money with at the time. And also at this point in the video, I tend to plug my WeBull affiliate link, where if you sign up and deposit $100, you'll get 2 free stocks. But I may have found a deal even better than that, and that deal is the public account. So if you sign up to public and don't deposit $100, you will still get a free stock, and you won't have to put any money into the account in the first place. I know when I was promoting that WeBull affiliate link, a lot of people didn't want to deposit $100, so they didn't get their 2 free stocks. But with public, all you have to do is use the link and sign up, and you'll be guaranteed to get 1 free stock, which I think is an even better deal because that's even more free money. So if you want to do both, then do both. I'll put them both in the link in the description below. But if you just want to use public where you don't have to deposit $100, you can use just that public link. However, getting back into the purpose of this video, let's talk a little bit about this lazy portfolio. As I said, this portfolio only consists of 3 index funds. It is a very simple portfolio, and it is basically all about investing by percentages and not necessarily worrying about picking the right stock or company that will go up 10 times your money. And I think that having a portfolio like this provides much less stress for the average investor because they don't have to worry about reading financial statements, looking at company data, different things like this, which is not necessarily a bad thing. But for a person who doesn't want to exert that effort into finding the right company every single day, having a more lazy portfolio is the way to go. Now, personally, I have a lot of friends that love investing in individual companies. Almost everyone I follow on YouTube invests in individual companies, and that is awesome because you get to teach other people on how to look at financial statements and different things like that. But for me personally, I recently read this book called The Smartest Investment Book You Ever Read, and ironically enough, it made me rethink everything I knew about investing in terms of risk and reward ratio and the actual benefit of trying to pick an individual company versus going with a diversified index fund portfolio that covers all of the bases. So let's now get into my Fidelity portfolio so you can see exactly what I'm talking about. So as I pull up my Fidelity portfolio right now, we can see that it is now valued at $51,440. Now this in itself is a big milestone for me because this is the first time in my life, obviously, that I had a portfolio past $50,000, and the plan or the goal is to try to get this thing to 100K by the end of 2021. We have about 6 months to go, and I feel that if we work hard, if we continue on the rate that we're going, we'll be able to get here by the end of the year. But if we don't, then we'll still be in good shape. So now that we're in the portfolio, let's break down on where this $51,000 in itself comes from. And it basically is in 3 different accounts. In the taxable or the regular brokerage account, we have about $41,000. In my Roth IRA, we have $9,000. And in my son's custodial account, we have about $1,300. But as I full screen here and we look more into the positions, we can see exactly what funds we hold. And I'm going to try to go down this list one by one and only my taxable brokerage account to give you guys a good backstory or a good reasoning onto why I picked each one of these index funds. And first on this list, we have the Fidelity Total Market Index Fund, or FSKAX. And this fund in my portfolio has a current value of about $25,800 at about 63% of my portfolio, and I own almost 215 shares. So if we pull up FSKAX on the Fidelity screen, we can see that this is a total market index fund with an overall rating of 4 stars, and it is right smack in the middle of the risk category. But the thing with this index fund that I love the most is that it has a very low expense ratio at about 0.015%. Now, most ETFs that you see will have an expense ratio much higher than this at about 0.02% or 0.05% or somewhere in that similar range. So this is really one of the lower expense ratios on the market in terms of getting a total market index fund that tracks the overall economy. Now, I could have gone with an S&P 500 index fund, which I've made videos on in the past about, but for this particular lazy portfolio, I wanted to get a total market index fund that had the biggest, I think it's 1,000 companies in the United States. And even though it does have the total market and not just the S&P 500, most of the top major holders holdings are still in line with what is in the S&P 500. So if we look on the side over here, we can see the top 10 holdings are Apple, Microsoft, Amazon, Facebook, Google again, Tesla, Berkshire Hathaway, and all of those good companies. So you can see that even though this is an index fund, I am investing in these individual companies as well through the index fund. So it provides me with a diversification without me having to worry about buying and selling individual stocks. And right now, as I said, it is about 63% of my portfolio. Next on the list of my portfolio is the Fidelity Real Estate Index Fund, or FSRNX. And this is actually a new index fund I didn't talk about in my previous video on the lazy portfolio. And I replaced the bond index fund with this index fund because I thought that at my age and at my risk tolerance level, I would say that I really didn't need bonds in my portfolio. So I opted to replace that with this Fidelity Real Estate Index Fund. So if we pull up this fund's fact sheet, we can see that it does have a 2-star overall rating, which could cause some concern. And it does have a much higher risk level as compared to the total market index fund. But we have to remind ourselves that this is a relatively small position in the portfolio at about 10%, with the expense ratio also being very high at 0.07% in comparison to the 0.015% that we saw in the other index funds. So I believe that this is the one fund that I would deviate with most investors on, where that if you didn't want to go with a real estate index fund, or if you did want to go with a bond fund, you can really use about 10% of your portfolio to make some speculative plays. So if you wanted to be an investor in Amazon more heavily, I would say that 10% of your portfolio is not too much to sort of use your money to invest in companies that you really felt passionate about. Now, I'm not saying that I feel really passionate about this index fund, but I do want to get some exposure to the real estate market. And because I don't have any rental properties right now, this is the best way to do it in my opinion. And we can see that the top 10 holdings over here are some real estate or REIT trusts. And overall right now in this particular portfolio, it is up about 1%. But as I said, I just started this about a month ago from my last video where I was trying to get everything transferred over. And the last index fund that I have is about 27% of my portfolio, and it is the Fidelity Total International Index Fund, or FTIHX. So FTIHX is very similar to the other index funds that I have, although this covers the international market. So if we look at the top 10 holders, we can see that it has Alibaba, Samsung, Nestle, all of the international companies that weren't included in the first index fund that I mentioned, which was FSKAX. Now this one does have a higher expense ratio as well, but it is relatively low at 0.06%, and it is just a way to get some international exposure in the portfolio. If we look into my Roth IRA, we can see that it is exactly the same holdings at almost exactly the same percentage. If we look into my son's custodial account, almost the same at almost the exact same percentage. And the percentages exactly that I try to shoot for is 63% in domestic stock companies, 27% in international companies, and 10% in a speculative index fund or a real estate fund, in my opinion, which is the real estate fund that I hold. And overall, this typically adds up to about 100%. And now I want to talk really briefly about why exactly this fund is so important for average investors, or so vital to get a good grasp of, because it allows you to free up so much more time from learning about individual companies, from reading financial statements, as I keep saying, and you can use the time that you are using to try to maximize your investments to then try to make more money. So that's what I'm doing with my time instead. Instead of using a ton of my time to try to go out and find the best performing stock of 2021, I'm just going to dollar cost average into this index fund portfolio each month and then let it sit and grow on its own, so I can use all of my extra time and all of my extra energy to make more money that I could then funnel into this portfolio. I think the trade-off is that you're taking less risk with your investment, obviously, so your return will be less, but you also are then opening the doors to earn more money, which then allows you to invest more money, which then would increase your return on your investment. So it definitely is a different way to go about investing, and it's one of the first time I've actually tried to implement this strategy, and so far it is going pretty well in my opinion, as I have been less stressed in trying to check my portfolio every single day to see what's going up and what's going down, and then just trying to find ways to make more money so I can invest more. But I know that this was a fairly quick video. I wanted to just give an update on this lazy portfolio just so I can be as transparent as possible with you guys, so you can see where I'm coming from and where I am investing my money, or what strategies I am trying to pursue. And I keep saying I'm going to get back on my grind of uploading 3 videos a week, which I do plan on doing. I've just been in an analysis paralysis of myself by taking things like negative comments way too harshly, about just getting in my own head with my own videos and deciding not to upload videos that I probably should have, different things like that. But then I think back to the reason why I started on YouTube in the first place, of how I just wanted to have fun and share my investing experiences and just overall connect with a new community of people, a new community of like-minded individuals, not necessarily worry about the comments or the views or or the money or anything like that, because before I was monetized, I was just doing YouTube for fun. And I think it really should stay that way, of just doing YouTube for fun, and any money that you make from it would just be icing on the cake in that sense. But with all that being said, I really hope you did enjoy this video. Don't forget to use the link in the description to sign up to public, as you don't have to deposit $100 to get your free stock. But if you want to get 2 free stocks, you still can use that WeBull link in the description, where you will get 2 free stocks if you sign up and deposit $100. And if you really want to support the channel, hit that like button down below, and I'll see you in the next one, guys. Peace.